In less than a minute, has Wall Street ever gone absolutely bonkers? That is precisely what transpired when Blackrock announced the news that will alter Shiba Inu's fate. All across the trade floor, three words are resonating. Presently, $10 billion in Manhattan. Not joking. Those are the dimensions of BlackRock's recently unveiled Shiba Inu ETF, which is causing conventional wisdom in finance to reevaluate its position in the Bitcoin market. Do you refuel? Still can't believe what you're reading. You've checked your phone 100 times in the last hour. The same institutional behemoth that handles over $10 trillion and changes its name is BlackRock. The CC has recently received paperwork for the largest cryptocurrency ETF ever, filed by whole markets with a single statement. Bitcoin and Ethereum aren't this, though. So, the Shiba Inu token, which began as a meme but is now preparing to get the stamp of approval from Wall Street, is this. The complexity of mathematics is mind-boggling when you put your mind to it. At the current price point, $10 billion would be enough institutional capital to buy around 75% of the Shiba Inu dogs in circulation. You now feel like you're sitting on a powder keg with your tiny hoard of 20 million tokens, right at 4 zeros 134. According to the principles of basic supply and demand economics, prices could drop by a significant amount in an instant if even a small portion of this capital were to enter the market. Seasoned traders who have survived every market crisis since Black have never seen anything like the sights emanating from major financial cities. Monday is completely confused and staring at their screens. As seen on CNBC livestream, traders are scrambling to make calls as they try to make sense of how a dog currency became the focal point of a $10 billion institutional play. As the news emerged at 7 a.m., insiders inside major financial banks described extreme pandemonium, and Goldman Sachs' crypto desk reportedly went into emergency session. Those same portfolio managers who wrote off meme currencies as speculative trash a few months ago are now rushing to grasp the basics of Shiba Inu. Traditional finance is feeling the effects of the current frenzy to learn about Shibarium's burn mechanisms, transaction volumes, and other related topics. Volatility models are already in the works at Morgan Stanley's derivatives division to possible futures for Shiba Inu breeds that have not even been conceptualized. To foretell the public's reaction when their beloved meme coin receives the BlackRock endorsement, quant experts at JP Morgan are mining the blockchain for all cryptocurrencies that have ever attained institutional adoption. The thing that this move is genuinely groundbreaking because it not only involves BlackRock but also sets a precedent for other significant institutions to follow. The $8.01 trillion is overseen by Vanguard. There is a $4.05 trillion trust fund. Nearly $3.07 trillion on State Street International. These behemoths of conventional banking have been sitting on their hands, waiting for an entrant to pioneer the use of exchange-traded funds, ETF, for cryptocurrencies other than Bitcoin and Ethereum. I simply gave them the go-ahead. Finally arrives. According to sources within the industry, 3 other large asset managers are reportedly already in talks with their legal teams regarding the launch of competing Shiba Inu products. The impending institutional fear of missing out, FOMO, could surpass the level of fear experienced by retail investors. The CC filing provides a chilling account of BlackRock's plan. Rather than relying on derivatives or futures, the fund will follow the price of Shiba Inus by buying tokens directly. Wall Street is trying to make sense of what just transpired as more and more institutions pour money into the fund, which means that every dollar goes toward buying Shiba Inus. This creates systematic buying pressure. Individuals who have held Shiba Inu investments during the downturn in the market are likely feeling a mix of relief and shock. Screenshots displaying immobile portfolio balances over months have been going viral on social media. The psychological impact of suddenly exhibiting seemingly unrealistically high green numbers is immense. Some of the most astute investors in conventional finance have fallen behind retail traders who invested in Shiba Inus based on online memes and community buzz. All it takes is one announcement to go from a useless dog currency to a digital asset fit for institutions. Within the first hour following Blackrock's announcement, Robinhood recorded a 34% increase in the number of Shiba Inu trades. AIDS. Retail investors hurried to expand their positions before institutional money fully arrived, causing the mobile app to fail twice from traffic overload. Clients are calling even more conventional brokerages, such as Charles Schwab, to inquire about first-time entry to cryptocurrency markets. Technical analysts have been patiently waiting for months to see what the charts are showing. With volume that verifies institutional accumulation, Inu has surpassed all key resistance levels. After forming a descending triangle, the daily chart displays a classic breakout. The volume indicators are displaying unprecedented rises, surpassing anything witnessed during retail-driven rallies, as the $10 billion ETF announcement serves as the necessary catalyst to maintain moves over previous resistance. These retail traders aren't acting in a panic. They're following a disciplined approach. Affluent participants who are aware of supply and demand accumulate. The fact that moving averages are starting to align in bullish configurations, along with the imbalance that $10 billion in institutional money will produce, indicates that this breakout has the technical basis for persistent growth. An ascending triangle that has been forming for the last 6 months is seen on the weekly chart. The statement by Blackrock provided the necessary catalyst to finish the pattern. According to the size of the triangle, technical goals could indicate possible price movements to levels that would indicate multiple zero deletions from where prices are now. The burn mechanism of Shiba Inu increases the effect of institutional buying pressure, which is something that many conventional financial experts still don't see. Whenever a transaction occurs on the Layer 2 network, Shiba Inu tokens are automatically destroyed, giving rise to deflationary pressures that intensify as adoption increases. Instead of merely purchasing tokens, BlackRock is funding an ecosystem that deliberately decreases supply while increasing demand with its $10 billion investment. Taking Shiba Inu's growth trend into account makes the maths even more convincing. Since the network stability was improved in May, the daily transaction volume has climbed by 34%. There has been a dramatic increase in the number of users who regularly spend their tokens on Shiba Inu-based gaming sites, NFT marketplaces, and DeFi protocols. This adoption will be increased at an exponential rate after it is validated by institutions. Solen. There are strong synergies between gaming and institutional investment when it comes to the Shiba Inu ecosystem. As more and more people start playing games centered with Shiba Inus, they'll burn tokens for in-game purchases and add entertainment value, which will bring in even more people. There may be feedback loops that cause prices to rise far more than expected if institutional buying pressure and organic burn acceleration combine. The worldwide financial markets have reacted strongly to BlackRock's news. The amount of Shiba Inu trades on European cryptocurrency platforms increased by 280% in the morning. When retail investors in Asia see the importance of Shiba Inu's institutional acceptance in the US, they react even more strongly than they did in Asian markets before. The news has prompted financial regulators and central banks around the world to move quickly in crafting policies around cryptocurrencies. In response to the growing interest among institutions in digital assets, the Bank of England released a statement shortly after BlackRock's registration. In order to address the regulatory frameworks for Bitcoin ETF, the European Central Bank called an emergency meeting. The revolution is already here, according to recent market events, declared in a single